What's going on, guys? This video is basically a part two of not last week's, but the last video, as we were talking about technical analysis on the SPY as well as the QQQ. For those who don't know, the SPX is the actual index. The SPY tracks the SPX, and that's why it moves the way it moves. And the NDX is the index, and the QQQ follows the NDX, and that's why it moves the way it moves. So basically, I want to look at the index itself because I went back in time. Not necessarily back in time, but I looked back at the charts and found when have we had 6 weeks in a row negative red weeks, and what happened? Basically, we've never had 7, so we're at 7 currently. So this would be the first time if we were to have a green candle this week. But the times whenever there was more, what type of percent gain did we see after we finally actually saw a trend reversal? So we saw 21 points. Oh, wait, hold up. The 70, we saw 21.7, and in 2001, we saw 21.8. So there's pretty high chance of a lot of percent gain in this. And some catalysts that we'll get into later on also support that or could negate that as well. But anyways, look at that. We also look at the daily time frame. Look at standard deviation channels. I marked this at the top. Basically, whenever this was at, it's been bouncing down to the middle, no man's land to the upside, to the middle, to the bottom, and we're at the bottom once again. So what is the most likely move that we're going to make? It's up. The chances of it going down here, or the statistical probabilities of it going down there based on the past data, is low. So we have a high probability chance that we're going to go to the upside. As I talked in the other videos, we're basically between the first and second deviation on the Bollinger Bands. So it's kind of no man's land because technically the trend is overall down. But on the weekly time frame, it provides us some nice insight. Basically, we're at the third deviation. So basically indicators pointing at a little bit more bullish than bearish. Something I like to point out, though, is this value line geometric index. So on this index, basically, it takes the average of different companies of North America and consider the general market. But everything is equally weighted. That's the thing, equally weighted. So if we take the average of all those companies, basically, we have not put in a lower low. However, on the SPY, we have put a lower low. So basically, I'm just looking at the divergences of this. And if you look at this, the times that there has been divergences, it followed the value line geometric index. And I'm not saying it's going to follow it once again, but just think about the theory behind it, though. So if everything else, like I say, the general market is healthier than the actual SPY, it's because the mega caps are suffering more than the regular market itself. So that provides a lot of upside because if the bigger indices, not the bigger indices, the bigger components of the SPY or of the index itself is down, if it was to flip bullish, they definitely pull us to the upside. So let's go ahead and look at some of the biggest components of the SPY and the QQQ, which is, first of all, Apple. Apple is the largest holding of the SPY and the QQQ, if I'm not mistaken. 7% or 9% on the SPY, and then it's 12.5% for the QQQ. So we're at a major area of resistance of the past, but support in the future and current phase. And basically, we wick below it, closed above it, hammer candlestick pattern, higher than average volume. It's looking good for a bounce. I won't say for the trend reversal, but possibly bounce up, retest this trend line, and ultimately fall down. That would make sense, in my opinion, as it could possibly set up this type of inverse head and shoulders type pattern. I don't want to predict the future, though. I'm just saying that's what's there. You could also argue that this broke out of the channel, broke down, retested the longer time trend, and ultimately failed. With increasing volume, which would also be true, but this is holding up so far. So until I see this break, I'm going to stay with my bullish stance. Same thing with Amazon. Amazon, we're at major support, past resistance before COVID. And ultimately, we hit there, bounced up, hit this resistance level, came down with more volume than we did on the way up. And ultimately, we're in no man's land at the moment. But we do have a hammer candlestick pattern, inverse hammer. Oh my God, I cannot speak. What the fuck? Basically, I would like to see a break to the upside of this level or a break to the downside of this level in order to get confirmation whether it be the upside or the downside. However, something to watch out for a possible catalyst is the shareholders of the stock are going to be voting for a stock split, yes or no. Basically, the board of directors said that they want to do it. They are going to do it. Now it's up to the shareholders, because the directors lead, but the shareholders that ultimately have the say as in the company, whether it's going to be a yes or a no. Sheesh, I cannot talk today. God damn. Another indicator I want to look at is the NDTH, basically the breadth of the market. That's what I heard it as referred to in the past. Basically, the times when we've been at the current levels, it's been an area in which we've inflected and have gone back to the upside, and has marked bottoms in the past, as you can see. When it peaked to the bottom, or the trough, I guess you call it, we troughed at the bottom of the market as well, pretty consistently. The time it hasn't was the whole housing market crash. But ultimately, it did provide a short-term bounce, which is what I'm trying to argue at the moment. I'm not trying to argue about a whole trend shift. I'm just saying that that's a possible thing. And people get suckered in by that if we do see a substantial move, because then they'd be like, oh, it's over. The whole scare of everything going on in the world is just over. We're bullish now. We've experienced what we're going to experience, because usually the markets precede the economy. But I personally still think there's further downside. But we'll talk about that a little bit later. So another thing to look at is the Blitzcall Ratio. Basically, whenever this goes above this 1.23-ish level, it's tended to mark bottoms. Not 100% of the time, as you see it filled here. It did pass here. COVID did pass here. Passed here. Kind of failed there, but ultimately, if you would have held long enough, you would have seen green. Passed there. Passed there. Passed there. Past there. As you can see, you could go back and you could back test this. We can continue to go back. I don't want to just back like I'm hiding something. Look at past there. Look at past here. It passed there, at least for a short-term bounce. Ultimately, a bigger bounce. But again, we could go back as much as you want, but you could do that in your own time, just because I don't want to keep this video short. But ultimately, we're getting back to that range. It failed here. It technically could fail again, but again, there's other confluences that are pointing that we could possibly have a trend shift. Same thing with the VIX. VIX, it's not 100% accurate, but whenever it was at the top of this trend line and ultimately broke down, it marked a potential bottom. Here wasn't the exact bottom, but there was upside. Bottom wasn't the exact bottom, but there was upside here, and ultimately a bigger upside here. When it was at the bottom of the channel, though, it marked the top, not the ultimate top, but there was more downside. If you wanted to play the downside, again, bottom, and we're possibly going to be touching it once again. However, what's interesting about this actually, though, is on the weekly time frame, we've actually been going down. And what has been happening in the markets as well? We've been going down. And usually the volatility index is kind of like an inverse of the SPY, which makes complete no utter sense, because it's supposed to be a volatility index. Volatility is a magnitude. It's not negative or positive, at least in my opinion. So that's the way it should be seen. So if it goes up, that means volatility in the markets is higher, regardless which way it moves, whether it moves to the upside or the downside. But usually it acts as an inverse of the SPY and the QQQ. Another thing to look at is the fear and greed index. Fear, extreme fear in the markets. I don't like relying on this completely, just because it's not relative to past times. It's what's in the moment, if that makes sense. So there's been time that there might be a reading, like I'll say at 11, when in reality the market was much better stance than it is right now. So again, it's not relative to past times. It's what's currently there. But either way, it's extreme fear, and usually it provides the best buying opportunities, and extreme greed provides the best selling opportunities. Another catalyst that we might have is NVIDIA's reporting their earnings. AMD had great earnings, and it's been putting in higher lows and higher highs ever since, despite the market putting in lower lows and lower highs. So that's good news, especially since it's a heavy hitter within the SPY as well as the QQQ. Something that could possibly work against us, though, is Costco's reporting their earnings report. Alibaba's reporting their earnings. Ralph Lauren, Gap, Dollar Tree, Dollar General, all these retailers are reporting their earnings. And what we've seen recently is that in Walmart as well as Target, they've been having these mega declines. Why? Is because their margins are being cut into because of the supply chain issues. It's really cutting into their margins. They're not able to be as profitable as they should be. And usually in times of recession and usually in times of economic downturn, you want to buy consumer staples, but it's performing so horribly. It might provide a good buying opportunity, because the investors that wanted to get out got out. But at the end of the day, the trend is ultimately down. You want to wait until there's a trend shift. So it's kind of scary, because we have a lot of retailers that are going to be reporting this week, and that could bring the market down as well. Another thing that could either boost us or bring us down is that Fed Chairman Powell is going to be speaking at 12:20 p.m. Eastern Standard Time. Excuse me, on Tuesday, and he's also going to be speaking at the FOMC meeting, FOMC minutes on Wednesday at 1 p.m. Central Standard Time, 2 p.m. Eastern Standard Time. Y'all can figure that out if you live somewhere else. No offense. But let's go and look back at what has happened the times that he spoke. So this was the FOMC minutes meeting for April, or for March leading into April. This was the actual rate hike of May, whenever the rate hike happened. And this was what it was expected. This was given what was expected. Either way, if it is what was expected, then we'll get a rally. And basically, Fed Chairman Powell said basically a 50 basis point rate hike or less is what is to be expected at the next two meetings, basically. So 75 basis rate hike is not on the table. So that means it's either 0.25 or 0.5 percent increase. If it's 0.5, it's what is expected. If it's 0.25, then that's hella bullish, bro. Hella bullish. And we'll probably see a super mega rip if that is the news to come. But again, I'm not counting on that. Again, these are all just confluences that are happening at the moment. Let me know if there's any other ones that y'all think of that could work against this. I don't want to go in blindly or go in ignorantly or make it seem like as if I'm going to make a bull, because I'm not. At the end of the day, I expected the markets to go down. But again, that's the catalyst that I have. Those are the technical analysis I see, and I look back at the statistics of things, and it's the probability of getting a bounce, and not only just a bounce, but a big ass bounce, is pretty damn high. And we're looking at like a 21, over 20% increase, and that basically put us at like a triple top. And if we look at the SPY or the QQQ, I look at the QQQ just because I have TQQQ shares at the moment, and basically a 20% increase, that would put us pretty damn high. So if you go from the bottom, 20% would put us about right there, slightly over the 334 area, 340-ish area. That's pretty damn high, guys. So that'd be a good buying opportunity if you were to get in here as a gamble. I'd wait for the breakout, and I got in previously because I thought it was going to break out, but it didn't. But I'm holding my shares because my thesis still stays the same, based off of the statistics and technical analysis. But again, these catalysts could change that, and I might get out of my positions if that's the case. But in the meantime, I'm just going to hold on what I have now. But appreciate you guys for checking out the video. Sorry for the noises in the background because I am having some remodeling done at the crib. But in the meantime, just go ahead and check out the Instagram page. Got some memes on there, post funny videos as well, time to time. I'm trying to get a little bit more active on there, and that's where most of my updates are on. I usually post on my story, updates-wise, what I'm in, what could be a play. But here on the YouTube channel, I try to do technical analysis, the podcasts, and different stuff related to the markets. So if you want to see any more of that, just check it out, subscribe, check out the Instagram page, whatever, man. And y'all have a good night.